And we are live. Hello, everybody, and welcome back. It's been a while. We've had a summer break, but Blockchain Won't Save the World and LinkedIn Lives are back on the calendar. And I'm very excited today to be joined by Mathias Ruch. He is the CEO of CV VC, co-founder of CV Labs, and generally speaking, one of the most interesting and influential people in the world of Web3, particularly in and around Switzerland and Crypto Valley. Matthias, how are you doing today? Are you well?
I'm so good. Thank you so much for having me. I'm very good. How are you?
I'm good. All is well. Taken a couple of weeks off. Well, you're never really off in Web3, but have changed scenery. Took a little bit of extra time away. Refreshed, feeling good. It's a very exciting time in Web3. Also, I assume you're very busy with CV Summit coming up next week in Zurich. Have you had any time above and beyond that to do any regular day-to-day work?
Look, I have a brilliant team. So Benny and the whole team is taking care of everything regarding CV Summit. There's a lot of detail work that I don't have to take care of. So very happy with what they're doing. I'm still involved, of course, and people get excited. It's the biggest of its kind here in Switzerland. So covering these topics, and we go bigger as well in Zurich now these days. So very excited. Very much looking forward to next week.
Fantastic, as am I. For those people who don't know, CV Summit in Zurich next week, 22nd, 23rd of September. Go check it out on CV Summit. Shout out to Benedek, who is everywhere right now. You can't miss him. He is prolific. His content is everywhere. He's doing a brilliant job in making people aware what's going on. As you said, pretty much the biggest event in Switzerland in Web3. So now is the time. So don't forget to check that out. And on with the show. So Matthias, for those people who don't know you, people who haven't met you yet, could you give us your brief Web3 introduction? How did you find yourself in Web3? How did you find yourself working with blockchain and decentralized technology? What was the moment for you?
Cool. Happy to do so. So I'm first and foremost, I hope no one is disappointed. I'm not the Bitcoin maxi. So my angle into Web3 was through the technology. And so I've been in Web 1, Web 2, and Web 3. As a founder, I've founded over a dozen companies myself, including complete failures, but also a few successful ones. And in Web 1, that was when I was at university. I'm a useless economist. And so when we were studying, everybody wanted to do something with the internet. So I started with a web design shop, took it from there, founded companies in various sectors from fintech through to a spice shop, by the way. And I then had a phase of angel investing. So we're now fast forward in the 2010s, early 2010 to 13. And I was actually looking for a software to automate processes in the background during my angel investing activities. So really just automation. And I stumbled across smart contracts at the time. And, we were based out of Zug. So that's a tiny town, for those that don't know, in Switzerland, close to Zurich. I think home to 30,000 multinational companies, the same amount of citizens and probably cows. At some point, I realized that something big is happening in that tiny town. And because we were probably the only ones catering to the needs of the tech startup industry in Switzerland, we were focusing on the European region for incubation and startups, not non-sector specific. And suddenly I really, really remember at some point I woke up one day, I realized that Silicon Valley had moved and is now called Crypto Valley. And that was a bit the vibe, so it wasn't like 10 or 100 or 500 companies would come to Zug in these early days. I'm talking 2016 now. The term Crypto Valley wasn't even coined at the time. It was thousands. And we then, I think in the first year, 2016, we looked at 1,000 projects. And, the majority was rubbish. But then you were left with a couple that really got you thinking. So we knew there's something happening. And from a business perspective, I think we pivoted from 0 blockchain to 100% blockchain in a year. And I got hooked. And ever since, it's the greatest thing that ever happened to me. I'm active on 2 ends. So I think from my perspective, this is probably the biggest opportunity of my professional life. And then on the other hand, at the very beginning, when I saw what that could mean for Switzerland as a jurisdiction, Switzerland was very friendly when it came to when it comes to these businesses. You could actually, create growth for decades. So I became active at the early days, basically to prevent dumb regulation. So I wanted to have a smart regulatory framework. So I also started the Swiss Blockchain Task Force. Today it's called the Swiss Blockchain Federation, which is catering to the needs of the industry these days. So that's my journey in more than 2 sentences.
That is some journey down the rabbit hole. Thank you for qualifying that it didn't start with the Bitcoin white paper at the beginning. I think there are two types of people in Web3. There's the Bitcoin white paper ones, and then there's the guys who find their way in through other means. And I think it's an inspiring story. Honestly, it's trying to look for value or getting excited by the use of the technology. I think is an honest way to make a living here. There are many ways to make a dishonest living in crypto, but honestly speaking, I think that's if you build intimacy with the potential, if you build intimacy with the teams, and then if you're able to build wealth through allocating capital to teams that have great potential, honestly, I don't think there's a better way of doing it. And so that led to, I assume, the creation of CV VC, and then latterly the creation of CV Labs. Talk us through that one, because we are in the era of institutions. If you consider yourself to be an institution or part of the institutional landscape, I am an institution. I mean, CV VC, if you consider VCs to be part of the institutional collective set, and this is the time, right? It's never been more exciting to be an institution. Primarily, I think, because the background music is safer regulatory environment in the United States. Mm-hmm. That being said, when you were starting out, you actually had and were proactively involved in developing what has always been a relatively crypto progressive regulatory landscape in Switzerland that a lot of people don't realize exists, and that actually the creation and the kind of the growth of businesses in Switzerland has been ahead, or if not leading, compared to most jurisdictions. Talk us through the journey from all of that into CV VC and now CV Labs as well.
So yeah, very happy to. So let's go back to 2016, and that was really the days when there wasn't a big community. It wasn't like today I would suggest there's some 10,000 people working in blockchain in Switzerland. So at the time that wasn't the case. You knew everybody basically, and of course you would only talk to this community and all the ideas that were floating around. You would half understand them, but try to. But everyone out of that bubble would not understand a thing, right? So and that's really, you needed to build bridges to the government and so. If the start of our business, the predecessor company, when we screened these 1,000 projects, and we wanted to start investing in the sector, we realized that the maturity level of the startups, if you would compare them to, let's say, fintech at the time in Europe, was way lower, right? So it was the times when you would meet some guy named Joe with his developer called
Vitalik.
Let's call him Vitalik, right? Like 3-page deck, and we're trying to raise 30 million tomorrow in our ICO, and then you would meet them next day and they would raise 50. So that was the days, but the majority, of course, was really, not sustainable, was just great ideas and no execution plan whatsoever. So basically we said, okay, we need to level the whole ecosystem and bring it to a level that is sustainable for the long run. So we actually started with CV Labs, which is our ecosystem business first, right? Before we invested. So that's now 2016, 17, entering a bear cycle, if I'm not mistaken. So we then started to invest in 2018-ish, 19-ish, when it was bearish, right? So and we wanted to cater to the needs of the space. There was basically in Zug, there was nothing, right? There was a Starbucks and people would meet up in Starbucks. There was Ethereum, but they rented an apartment in the village next to Zug. They were a bit, on their own. And so we created a home, a co-working space, and our goal was to create a platform where all the stakeholders could meet and exchange ideas and everything. That was the initial idea of CV Labs, I'm sorry. And if you'd ask around today, probably the people in Switzerland would probably say you're the matchmakers, the key matchmakers in Switzerland, right? So if you want to get into the Swiss ecosystem, we can we can help, with a fast market entry, basically. That's what we did at the time, what we're still doing. But of course, the initial idea was to invest in the deal flow that we got to see at the time. And mind you, in 2016, 17, 18, because of the jurisdiction and because of the regulator being so friendly for the space, you would get to see 80, 90% of the deal flow globally in Switzerland at some point in time. They would just travel there. And since we were almost the only ones, we would get to see everything. So the thesis was pretty simple, just employ a standardized, systematic investment approach. You're going to have another Airbnb or Dropbox in that basket. So that's how we...
And you're still at a level of deal flow where you can probably still read every white paper and feel like you've got coverage, as opposed to today where it became very quickly very impossible to cover everybody's white papers all of the time.
We try. But then we had, from the very beginning, we had a very different investment approach, and we made it pretty clear. One of the mottos that we've had since the very beginning was utility over speculation. So if you don't build for utility or, business case, don't bother, right? So we're not going to look at you. And that the A/B selection was pretty simple at the beginning, and it became, of course, more intense the further down the funnel it goes. But that was, how we started. And then we started to invest in 2018 from the balance sheet. Initially, we've set up our funds, because when we started, we wanted to have a fund where you could put both equity and tokens in all the regions from the world. 100 startups in 3 years. So if you went to a bank or custodian at the time for a token, they would look at you and what are you talking about? That's not possible, right? So we warehoused these investments, put them into the funds when they were ready, and we're at 75 investments these days, 21 countries, 12-ish industries, utility-driven, early stage, with an Africa focus as well. So we do both emerging markets in Africa, and then we have the global fund focusing on Europe, UK, and US, basically.
Gotcha. And has your view on utility changed over time? Because I think it's very clear, in the early Ethereum tokenize everything days, we were going to tokenize IP, we were going to transform the music industry, we were going to rewire the banks and destroy traditional finance. We were going to give everybody self-sovereign identity. We were going to, and the list went on of all of these domains that some really thoughtful ideas on applications for the technology came out. But as we got deeper into the digital transformation part of it, we started realizing actually, no, that's really hard, or the incumbents don't want transformation here and they're the gatekeepers, or the ability to drive change through consumer power or bottom up is actually really bloody hard. And we are making progress, but not at the pace that everybody is excited to see. How is your feeling on utility change and the burden of proof, I guess, on utility changed?
That's a great question. So the short answer is yes and no. Has it changed? Yes and no, right? So what I find interesting, like in every cycle, it feels like we're revisiting the same topics that we've had before, right? So let's pick tokenization. These days it's called RWAs, right? So, but we're tokenizing the same things that we tried to tokenize, 8 years ago, right? So that's funny, right?
We've rebranded from NFTs because unfortunately that one got sullied.
Exactly, right?
We're still using non-fungible tokens. We're just not calling it the same thing anymore.
We've started with the kitties and the crypto punks, and we're still using it actually. So it's not that bad. So that would be the no, so it's we're revisiting the same stuff and we're trying things. And then the yes is twofold, I would say, two-sided. One is really the phase we are in currently. You were mentioning institutional phase or whatever. So not all people like that, but it's driving the space massively, right? So and I was probably most frustrated in the past to hear about the 174th real estate tokenization project. But this seems to happen now, when you have the UBSs of this world, the Franklin Templetons, the BlackRocks of this world look into that. Because, the advantages, the benefits that you get when utilizing this technology, not in all areas, but in certain areas, are so big. The effects are going to be so big, efficiency, and so on. It's a question of time until you switch to that technology, and this could happen in this next phase. So that's why I'm really excited. For us, the whole utility over speculation motto is something that is popping up more in the past 18 months, so it's really, I think money isn't that cheap anymore. So capital is restricted. So you really have to come up with more than fancy slides these days. So I hear it more, which is great, right? So bring it on. This is where we have to go. Don't try to find a problem to solve for, solve something, which is of course very easy to understand or very easy to see if you are in emerging markets where it's very different use cases that can or need to be solved, and what the builders are building for. So that's really exciting for us.
Very good. I like that. And just a build question on top of that before we get into the era of institutions, as you mentioned, Franklin Templeton and others. Do you find that now allocating capital to projects is easier or harder than it was before? The reason I ask that question is that I think in 2025, builders, founders have different sources of funds than they used to in the past, right? Before it would be a rich uncle, a VC, possibly a bank loan, and that was it. Expand and fast forward 2025, you have vertically integrated exchanges that have launch pads and wallets and their own accelerator programs. You have grants from layer ones, grants from layer twos. Heaven forbid, layer threes may even be offering grants with almost no tethering to requirements to build, right? It's just almost, at the period of time, it was almost free money. Now you've got to manage your treasury appropriately. There are more ways for founders to allocate, to get access to just pure capital today. I'm not saying that's better than working with a VC, but I'm interested in your take of how that's played out.
So what we've seen a lot in these past months or years is if you are within an ecosystem, that could be a platform, that could be a protocol, that could be certain area of technology, and you are not stepping outside of that bubble, you are missing out on future partnerships, on future adoption, on diversity of help that you can get outside of your bubble, which is crucial, right? It's a real world out there. At some point, whatever you're building, you need to have real users. You need to have real corporates that are buying your services, that are buying your products. You need to have real adoption. So we've always tried to explain to those large ecosystems that try to stay within that, maybe with a grant program, just step out of that bubble. If you have teams that do not know how the VC market works, how it works to get money from the free market, basically, right? They're not going to make it, right? So the sooner you get the reality out there, whatever you're doing, if you are building a business and you want to earn money at some point in time, get out there and understand what reality is. So that's what we're trying to do, So if you give money to someone without any strings attached, basically, it's build something and then traction will come. It's not going to work. It never will, It just doesn't work like that. Building a company is super hard. Building a successful global, big, large company is so hard, and you see so many successful people out there, but it's only a fraction of people that are trying. And that is really something that is as hard as it has ever been. Of course, we were coming out of pre-21 of where money was really cheap, basically, right? So you would suddenly sit in a meeting as a VC, and the startup would tell you whether they would take your money or not, which was completely different to before, when it was the other way around. But if it says the state of Web3 in 2025. From a founder perspective, risk capital, venture capital is more selective, right? If you are strong, if you have a strong team, you're still getting funded, right? So, but it's of course it's also the macro that is a bit hard, with the interest rates, the geopolitical uncertainty. That doesn't help for VC to build up momentum and raise funds and everything. So that makes it even harder. But then at the same time, with the inclination point that I have mentioned, there is so much drive in this industry, combined with AI and other deep tech. The momentum is massive, right? So, and I personally, from a industry space technology perspective, I think that the inclination point is in 3 areas right now. The first one is, as you've said, adoption. We can call it institutional adoption, but if you have, pension plans in the US allowed for Bitcoin integration, and your grandma, can buy Bitcoin this way, this is huge, right? If you look at BlackRock, the ETFs, bigger than their gold ETF, biggest ever now these days. I don't know how many funds they have, but they have a lot. It's the biggest of all of them. This is massive, and this is driving, so this is really, if whether you like it or not, this will be driving the industry. The US, and this is the second point from a regulatory perspective, is defining the framework of crypto and blockchain these days, right? Operation Choke Point 2.0 has gone. It's off the table. We have Project Crypto. They want to be crypto nation #1. We have the Genius Act. They're building the framework. If the US leads, it's such a big economy, and they're so strong, everyone has to follow, right? And this is happening right now. So regulation is coming around. And then third, I would say the third area of an inclination point in this industry is the industry or the technology itself. So the technology, everything is professionalizing. Technology is maturing. You're solving the problems. You're getting faster, cheaper, and all of that. So this is happening on one end. You can tackle the issues that you had before and make this institutional enterprise grade. And on the other hand, the players in the industry are maturing and professionalizing as well, right? So you have professional treasury management. You have companies that are, run by people who know how to run companies, large companies. So this is changing. I find it great, but at the same time, I also understand that people that have been there, grassroots, been there from the beginning, are a bit overwhelmed by this development that we have right now. But it's happening. So overall, no easy money anymore.
Yep.
The space is growing up, and be happy. It's making us all stronger.
Yeah, just be careful what you wish for, right? It's, mass adoption means everybody gets involved. And you can't have mass adoption just for the people you want. And also, as you scale, you're going to start requiring different skill sets or different experiences than you could either get away with or that you didn't need previously. The treasury management point is such a strong one. Even teams that receive grants who then, out of loyalty to the token, say, okay, I'm going to keep it all in this token and it may go up. Call that greed, call that loyalty, whatever you wish. But the challenge there is, this is my treasury. I'm going to work with it. Let's not diversify it into cash or other assets, or let's not put it into places where it can earn in different ways. It's like, oh crap, the token's just gone down 50%. So is my treasury. My runway is now cut in half.
Exactly.
This is a real problem. People struggle with these things. So this is almost also very similar to my path into Web3. Started in 2016, Deloitte, then into IBM, then into Polkadot. Gradually at that time, 2018, 2019-ish, the major foundations started realizing, well, if we want to grow, we need to be global. We need to be able to communicate to other humans the value of our technology. We need to be able to form partnerships with institutions, systems integrators. We need to be able to manage market intermediaries, whether those are Web3 native or not. This is the whole part of the scaling story. And that requires different skill sets. And as we go from teams of 5 to teams of 100, all the other stuff that comes with it, right? You say growing a global business is hard. Part of that hard is actually just managing 100 people, right? When you're 100 people, you're not a startup anymore. VeChain, we're 100 people.
Yeah.
Some of the challenges in our growth is not now the same. We still want the startup mentality. We still want the enthusiasm, the drive, the flexibility of a startup. But when you're 100 people, you need slightly different methods of organization. You need more automation in process. You need a little bit more structure. You don't want to become IBM, right? You don't want to become a giant bureaucracy, but you can't manage everything on Slack or Telegram anymore. And so, that growing up process I've seen firsthand, and it's it's a good thing, but it is a painful thing. And some of the purists, like you suggested, have not loved that transition, let's say.
I understand.
It's part of getting old.
But yeah, maybe. But then, if you have 100 people, you can afford one that has done it in the past, likes and knows how to do it. That's the good thing about growing and scaling, so you can then, okay, I have to, put some structure under the hood. Okay, maybe there's someone who has done it and knows how to do it. So that I think is solvable in the end. But I understand, and I completely agree, it's painful. It is painful.
For sure. But I think it's a good indicator. I think the professionalization of Web3, which is a journey that's been going, it's not a recent development, but I think the professionalism of the capital that's entering the scene now, you may be observing that some of your peers now, or some of maybe even competitors who are bringing capital into the scene, are bringing a slightly higher burden of proof, are bringing slightly different processes, maybe even bringing more capital, which again is, broadly speaking, a good thing. Whether that's grannies investing in hedge funds and then those hedge funds allocating that capital to protocols, I don't really mind what the source of funds is, as long as it's KYC'd and it's all above board. But that capital is flowing in is a massive enabler for the next wave. So I'd love to take a beat now on maybe some of the recent partnerships on the CV Lab, CV VC side, because I think along your journey you've made some very interesting strategic moves globally in different regions. UAE being one, but obviously also you mentioned Africa, and some of the deals or the collaborations you're working with now, if you're able to share, and no spoilers before CV Summit, but any of the kind of more recent announcements, just to give guys a sense of what's keeping you busy today and how are you looking at growth.
If I may, I'd first maybe focus on the partnership and collaboration angle, because we have partnered with many in the past and still do, but then maybe from a deal perspective, share a bit, what is our thesis, what are we looking at, what is, a bit more in that direction. With our DNA is Swiss, but we're a global company. So you've mentioned it. Our main hub is based out of Zug. We have one in Vaduz, Liechtenstein for European access. We're in Lisbon, in Berlin, in London, in Dubai, and in Cape Town. And Cape Town is our second largest hub for our Africa activities. And we partner, of course, on the ground with, all major Web3 stakeholders. It's always both sides, the ecosystem, where luckily we don't hurt anyone. Our main activity is to spend money, to invest money into great businesses. So most people like that. So we like to partner with everyone on the ecosystem side of things. We've actually partnered at the beginning of our journey with universities in Switzerland. There were great cryptographers in ETH, one of the Ivy League universities, tech universities in Switzerland. We've spoken to. They are really cutting edge researchers. We've collaborated from day one with the government, because it was clear that regulation will kick in. So for the Swiss purpose, we wanted to be close to them. We still are. We still try to optimize things there. And then maybe one special collaboration we've had was together with the Swiss government, the State Secretariat of Economic Affairs. We ventured into the African continent, basically. And the initial goal was to, help build out the sub-Saharan African Web3 and blockchain ecosystem. And we've been there in the early days of our journey, so 2016, 17, 18, we were invited by many countries to speak about the crypto valley. Basically, how can you build an ecosystem in 2, 3, 4 years with 300 billion of market cap and 10,000 employees and 1,700 companies? How is that even possible, right? And in Africa, I remember when early days, we've had 2 events, one at the stock exchange in Joburg. And it was very interesting because you were in an institution that could potentially be disrupted by this very technology. But they were open. You would see the financial, crowd attending this event. And then in Cape Town, we had one catering to the creative industries, to the developers. And it was so interesting, that the blockchain is so much more than just technology. It means so much more for, depending on the person you talk to. In Africa, it could mean even, fair elections, or the fight
You're
against.
getting into the more human side of what technology
Exactly,
can change,
right?
as opposed to in the kind of nice developed
Yeah.
Western world where everything is kind of safe and productive and normal. When you go to the more developing nations, they have higher order problems that they see either deliberately technology solving or without deliberate action or without deliberate focus, Bitcoin and crypto helping to redress economic power, or being able to just literally keep stability in the money you earn on a weekly basis, right? A digital version of the dollar, whereas in Argentina for decades, US dollars were circulating around as a hedge against government ineptitude or mismanagement or whatever you care to call it. We now have the modern upgraded version that exists on your mobile phone that can't be stolen from under your bed, and also has some other features around it as well. So all the same applies.
Absolutely, and that was really fascinating to see. And then you have leapfrogging. They have mobile payments since years, and they just upgraded programmably to crypto use, and that's just fascinating to see. So we did that with the Swiss government, and when that was a 2 or 3 year project, and along the way we saw that many opportunities that we've launched our own fund to invest in the opportunities that we saw, and we're partnering with many different Web3 companies for our launch into Africa, and still are. Just recently, Circle has invested in our Africa fund. So we're really, talking to the industry and trying to help them also access the emerging markets, especially Africa in this case. Now, maybe also interesting for those who don't know, we've been active in the UAE in 2020-21. We've helped DMCC build up their crypto center. That's one of the free zones in Dubai, pulled out of the region after the setup, I think in 2021. Why? That wasn't the ecosystem that we were looking for. So we need builders, we need developers in order for our business model to, run our accelerators. Core activity of our investment side of our business is our own acceleration program, and that was just not there at the time. And we've revisited since 23. We've revisited the region more intensively last year. Reinitiated the partnership with DMCC, and I'm very fond of the ecosystem, how it looks like these days, also in Abu Dhabi. So that's strategically very important for us as well. Now,
that's a great story as well, because a lot of people, they see the announcements, they get excited. It's like, oh, brilliant, this is going to be fantastic. But I think that's a testament to, I guess, mature capital, mature investment coming into the scene. Is we see the potential, but we also, if we don't see the value, we will dial down, because we have only a limited number of opportunities and we want to kind of go elsewhere. Yeah. Everybody can observe the speed of pace that the Web3 community in the UAE has grown. But like you said, it needs to be under the right conditions for your investment thesis. And I think this is a good time. I think 2023, 24, and now you do see more legitimate projects, more financial services, more institutions, more real world projects, as opposed to speculative coins or influencers moving to Dubai to save taxes. There's the amount of noise, and then there's the amount of output. And I think it's potent for people listening in to observe professional capital saying the time is not right now. We're going to dip out. We still love you guys. We're still interested. The thesis was correct, but it's not now. And then you go in when you see more of what you're looking for.
Exactly.
So credit to you guys for that.
Thank you. That's happening right now. We, also regulatory wise, the region is also coming around, right? So this is they've developed, and it's a nice regulatory framework. It's not me saying that, but if you look, we're analyzing, for example, where do new foundations protocols set up shop, and besides the offshore, let's call it British Virgin Islands and Switzerland, still it's also the UAE. So there is strong traction in the region. But if you don't mind, if I can share what we're looking at from a thesis perspective, from an investment perspective these days, it's that in very simple terms. If you look at today's world, and if you try to look ahead, will this world, contain less technology, less automation, less digitization? Is it going to be less of all of that, right? So we would all agree No, of course not. It's going to be more of all that. And the cycles, that, you know, how things turn around will be much faster, you know. So it's not every 10 years, you know, you have fundamental changes in the, you know, top 10 largest companies market cap. It's going to be faster, you know. And with AI now, you know, adding another layer of complexity and speed, the amount of information, the amount of transactions, the amount of digital assets, whatever that is going to be created in the future will be even bigger, you know, and growing exponentially. How can you control that? How can you make sure that, you know, information is real information? How can you make sure that ownership of information is verified? How can you, you know, make sure that you're allowed to see or to tap into that pool of information, and so on and so on. So
one of my favorite ones in this space is, how do we make sure that agents that act autonomously stay within the rails of their capabilities?
Exactly.
Which points us very quickly towards protocols and digital assets.
Exactly.
That's a podcast for another day, but we can see the direction of travel.
No, but that's really exciting. You know, that's where you see we can call blockchain the accountant technology of the fourth industrial revolution. Very boring, right? But I think, you know, as soon as blockchain is boring, as soon as we don't talk about it anymore, I think it has arrived, you know, and that's going to be the layer that is, you know, making sure that these, you know, it's going to be trillions of peer-to-peer activities, and the technology that can handle that is blockchain. So that's why we are so excited, and that's why we think this technology as a catalyst tech actually caters to all the big investment tech trends that we have these days. If you look at, you know, defense, you know, and that's big. Defense is big. A lot of money is being raised for defense at the moment, you know. So controlling all the digital activities that you have there, making sure that this is done in a way that is, you know, following rules and regulations, that's going to be massive. Longevity, healthcare, you know, sharing data, tapping into big data pools. These are very big topics that can all be solved with blockchain. And one of the pools or verticals that we look in, we call it programmable cryptography, but you know, identity. Big topic. I know the UK has just recently launched the digital identity, right? It's a bit of a mess, I've heard, right? So I'm not so sure. So
it's from the UK, so that wouldn't surprise me. I left for a reason. Not that I'm not proud of my heritage, but we don't always execute as well as we used to.
No, but the reason I'm bringing this up, we have an election. We're voting for the Swiss ID, digital ID, this weekend in Switzerland, right? So in Switzerland, you can vote for stuff like that. It's the second time. The first time it didn't fly. So
you're getting a second chance to get it right this time.
Yes, well, we're trying. Yeah. So let's see what's going to happen. You know, it takes 5 years when you miss it. So it would be correct. But it's a self-sovereign identity. You know, self-sovereign identities, digitally blockchain based, can solve many problems there. You know, you decide what you want to share. You know, when it comes now to, I don't know, let's go back to healthcare, genomic data. You know, I think that would be helpful if we could tap into pools of companies, of researchers, of universities that have the data, making sure that your privacy is respected, but you can use the data and maybe even combined with AI to come up with new drugs, to come up with, you know, new trials, whatever. So this is where blockchain really can make a change. So this is one of the areas that I'm really excited about. And then let me mention, I could go on for hours now, but let me mention one more. I think our industry has a bit of a communication problem. Just if you look at all the abbreviations we love, DPIN, DeFi, UX, whatever, you know, everything
NFT,
is
DID,
NFT, right? So
L1, L2, L3. You
lose 99% of the human beings with, you know, after sentence 3. So you know, focusing more maybe on the use case side of things and what we actually can do and be less in our bubble, I think would help all of that. Why am I saying that? Please make the UX better. Please make the UI better, you know. And so that's something where we try to chain account abstraction, all of that. It's so important, make this a smooth Web2 experience for everyone. Very passionate about that, because I don't like to work with the tools we have these days. I'm very honest.
100%. I'm in the same box, and for what it's worth, one of the main reasons I joined VeChain was we have an app store on VBeta of 50 applications that you can download on Android, on Apple, that make use of blockchain, identity, voting, cryptocurrency, tokenization of actions, distributed ledgers that people can download on their phones that solve small real-world problems focused on sustainability or focused on doing better for yourself, your community, for the planet, that sit on your phone that you can use every day, that use AI as well as blockchain and crypto tech. And the UI is mobile UI, because you're using the capabilities that we've built. The infrastructure that's existing in Web3 today is good enough. It is more than good enough. We have social sign-ons. We have the ability to obfuscate wallets and transactions. We don't have to call it smart contracts and tokens if we don't choose to. I think some of the time we get a little bit caught up in how excited or how proud we are of the things we've invented. And we forget, because maybe we spent so much time talking to each other or in those small huddles in apartments in Crypto Valley or wherever else it is, that we sometimes actually forget how the rest of the world talks to each other. And we can do better.
Totally with you. So I can go on. You have to tell me. It was just this is really what excites me, and that's what we're looking at the moment.
Very good indeed. We got to a good place, and if anybody's listening to Mathias talk about his thesis about the areas that CV VC and CV Labs are investing and supporting, and you're not excited, you're probably listening to the wrong show, or we can't help you. And also, if you heard the other thing about, when blockchain becomes boring underlying infrastructure that nobody talks about, if that's music to your ears as well, then that's not a bad thing either, because ultimately at the end of the day, we do want to use infrastructure for infrastructure and end up focusing on the applications, because ultimately those are the things people engage with. That having been said, agents will engage with infrastructure, and we do need to be able to provide that interface for agents too. So bear with me. There might be a little bit of noise in the background as there's a lawnmower going on about 3 inches from my head. But let's go for 2 more very brief topics. One, I also need to correct for Benedek, who's listening in. I'm sorry, I got the date wrong at the beginning of the show. I will correct it. But finally, we talked about the use cases. We talked about the areas of focus. What do you see are some of the major unlocks or the major things that you're working on with CV VC and CV Labs to help get wider Web3 adoption?
Look, we've talked about this at the beginning already. So a lot will happen organically right now, because of the inclination point that we're at, regulation, the US adoption, the big boys are playing the game. That's going to drive a lot of things, right? So as you've mentioned it before, a lot has been built, a lot is there, so we don't have to reinvent everything, but you just put it into practice, so and that's going to happen organically, whether you like it or not. So that's already happening right now. I think, to just maybe doubling down on the comms problem, I really believe the moment, blockchain, Web3, crypto, AI also, hype cycle, it's not going to be that much of a buzzword in the future, right? So it's all actually not important, right? So because in the end, you're using an app, you're using a service, you want to use the service cheaper, faster, whatever, from a user perspective, right? These are the things that matter, and not so much technology. I'm sure nobody here knows the technology or protocol that's being used when your cell phone creates a connection with yours, so you don't need to know. I'm just happy I can call my mom when I want to, or I can write messages to her. So this needs to happen, and I'm not saying that I don't like the energy that's in the space. That there's really, I was asked that I think by a researcher recently, why I think that there is much more in this industry, than just developers developing something and users using something and corporates buying something. Why there is so much more like an idealism in this space, and I love that. That is driving a lot of things. I'm not saying let go of that, but simplifying things, coming back to your question, UX, UI, focusing on real use cases, solving real problems, build, for long term, really good things take a while, So in order to make a change, you probably need a couple of years to get there. And that mentality, I missed it a bit in the past. I'm looking forward to really, come down to common sense, what's actually really needed to build something, and that is something that I miss. Regulation, we don't need to mention it again. Coming around, we're there.
I think we're in a good spot. And honestly, if you haven't observed the large players coming in on stablecoins, the movement around use of digital assets, Google this week announcing that they created a protocol with some of the largest players in e-commerce around peer-to-peer and agentic transactions using stablecoins, and being able to prove human intent around agent or agentic transactions on the internet. This is happening today. This is real stuff. 2016, 2017, we could only dream of this stuff.
Yeah.
And now it just pops up once or twice a week with some really big names involved. And they understand the opportunity, they understand the transformation. Obviously, they understand the ability to capture value. Banks are going to struggle to lose out on some of their traditional revenue streams, but at the same time, they're dipping in at the same time at different ends of the value spectrum. So honestly, it's never been better. The pace of change will never be slower than it is today, and the experience will never be worse than it is right now. So those are reasons to be positive.
That's a good summary. Note, I like that.
On reasons to celebrate, reasons to come together, reasons to come back to Crypto Valley, I will end with the correct dates for the Crypto Valley Summit in Zurich next week, 23rd to 24th. Matthias, I'm assuming you'll be there opening the show.
I am much looking forward to, I was mentioning that the industry has grown up. We have also grown up, I have to say. It's the 11th edition. Can you believe that? Benedict told me today it's the 11th edition, right? So I think wild. We did it twice, once or 2 years. So that's why we are at 11 now. So we've grown up. We're bigger. We're in Zurich now. It's the capital of financial adoption. At the Congress Center, we're expecting some 3,000 people, which is a lot for Switzerland, right? So it's going to be quite big. As I said, it's really the largest blockchain, digital assets, AI conference in Switzerland on 2 days, Tuesday and Wednesday next week, 23, 24. We have more than 200 speakers, 4 stages, 100 partners, over 80 banks and asset managers, and just think about that number, right? So that's never been the case in the past. It's within a year, you move from, I don't know, let's say it's a dozen, to 80 banks and asset managers wanting to be there, understanding what's happening. You mentioned the institutional adoption. That's why they are there. You have giants like Franklin Templeton, UBS, Citi from the bank side. And then you have the tech giants, Microsoft, Google, Palantir. They're based out of Zurich as well. They're coming, and so that's how it's a big topic, and it's taking off right now. I'm super excited, and come and see us next week in Zurich.
I will be there. And for those who may wish to see me there, or for anybody who I haven't seen for a while in Zurich, in Switzerland, I'm going to be doing a couple of things, one of which is talking about the applications of blockchain and AI for real use cases for millions of users. That is happening right now, today, in the real world, on App Store, on Google Play Store, and on VeChain. So anybody who is out there in Zurich, please do come drop by. Anyone's at CV Summit, do come say hi as well. Matthias, thank you for consistently supporting the industry, for continuing to present the objective bull case for Web3. You can't argue with any of this in a way that doesn't have some supporting fact that sits behind it. And so the more I hear people from Switzerland and from Germany, I was in conference last week talking about the future of Web3 with zero hype and, completely, blank tone with, enthusiasm, but no excitement in the voice, it's real. So have a great rest of your day. I'll see you in Zurich next week. Looking forward to a glass of something with you, and stay safe out there.
Thank you so much for having me. See you soon. Thank you.